What's up, guys? Bang, bang. This conversation with David Mercer from LMAX Group is awesome. He really understands the institutional world, and he understands how important regulation is. As you're paying attention to this conversation, remember that David has infrastructure that's trading billions and billions of dollars of Bitcoin and other cryptocurrencies every single month, and almost every single major institution in the world uses his products to trade. You may not have heard of LMAX Group before, but that's because they don't service any sort of consumer-facing retail investor. They only service institutions. So getting into the mind of somebody like this who talks to these institutions every single day, especially during a bear market, is incredibly valuable. Hope you guys enjoy this interview. Make sure you like the video, subscribe to the channel, and I'll see you guys on the other side. David, we're in a bear market. Prices have come down significantly, 70 to 90% in the crypto markets. And bear markets usually shake confidence. How do we know that these assets are here to stay? And what are you hearing from the institutional world? Are they running scared, or are they like, no, this is going to be here in 5 or 10 years?
Look, I think this fear is pervading capital markets at the moment. So it's not crypto, right? But it was ever thus. You know, out of crises come strong companies. And I'd say specifically in crypto, because that's what you want to talk about today, I'd say the confidence levels are arguably higher than they were this time last year. There are more institutions, more bigger names entering the space in 2022 than there was in 2021. That should be a sign of confidence. Now, let's layer on some reality on that. The sense of urgency may have gone. So in 21, it was like, look what you're missing out on. And it was, how do we get there quickly? Now it's, how do we get there correctly? But certainly from the conversations we have and from our traditional institutional counterparties, they've got bigger teams than ever looking at crypto, blockchain, and DeFi than they did last year. And they're showing a lot more intent. Certainly in our conversations, there's a lot more intent for them to straddle the whole of crypto and blockchain technology rather than just chase returns for customers that might have been the case in 2021.
I think a lot of people will be surprised to hear you say that while prices were going up, there was confidence, but actually the confidence is deeper now when prices have fallen. Is that a kind of proxy for people want to buy cheap and sell high? Or is that something around, it's just timing, and it took them years and years and years of seeing these assets out in the market and seeing the volatility to get comfortable to be able to actually start to allocate to it?
You know, you've almost got to ignore the crypto market. You've got to look at these institutions. I mean, they're large. They're criticized at times for being slow, but it's just the nature of their scale. So it is that Al Pacino speech. They move inch by inch, and they move the same number of inches in 21 and the same level of inches in 2022, which means they're getting much closer to delivering product. The way I look at it across probably the most significant gatekeepers in capital markets, the banks, is there's 4 things they do in every asset class. They invest in it, they trade it for themselves and on behalf of their clients. They clear it for themselves and for their clients, and then they store it or they bank it. They're a clearer for it. Today, they are doing about 45% of that. In that, all the bulge bracket banks have invested in crypto and blockchain. All of them are trading the derivative for their clients, and about half of them are trading it, clearing it for their clients. So the one thing they haven't done yet is store it, but they're making steps towards filling in that matrix and offering 100% of those services to their customers in the next decade.
What's fascinating to me about that is you guys were very early to helping service a number of these institutional clients. As you see them push deeper into the industry, kind of take on more of the potential things they could do with these assets, do you see the addressable market that these institutions see in crypto expanding? Or has there always been just this massive market opportunity and kind of that inch by inch approach to it? So is the market expanding, or are we actually just seeing them kind of capture more of what they already saw was there?
I think their addressable market is bigger. For the first time ever, people have started to talk to me and us about options in crypto. For the first time ever, these institutions are addressing DeFi, or certainly thinking, how do we play a part in DeFi? How can we be liquidity providers in DeFi? How can we get involved in stock borrowing and lending in DeFi? So probably if you look back 3 years, it was, okay, how do we access Bitcoin? How do we access Ethereum? How do we access the spot market and the futures market? Now they're looking at all these other opportunities and going, hold on a minute. There could be a big financing market in there. Don't get me wrong. It's not the financing market that's seen some blow-ups in crypto over this year. It's actually stock borrowing and lending and financing of transactions is one of the biggest parts of all institutions' revenue, certainly bank revenues. If you actually go into their detailed profit and loss, and that's what they're looking at now. So they're realizing that this spot market that, total market cap of whatever, $1 trillion isn't the be and end of it all. It's the leverage of that. And it's a derivative of that. So I think they're really starting to address the second and third derivatives and realizing that everything they do in traditional finance will come to pass in crypto and maybe more. So I think that's what's encouraged them to invest more than ever, and which makes me think that their adoption in 22 and their coverage in 22 is greater than it's ever been.
So if we go back to the internet and kind of the rise, in the mid-90s, you could have told your parents, hey, I'm quitting my job and I'm going to go work at an internet company. And I think a lot of people said, what's an internet company? And there was a very kind of strong line in the sand. There was companies that were on the internet and there were companies that were not on the internet. Today, if you talked about a company, just everything is a company, and of course they use the internet. Is that how you see this playing out over the next decade or so? Is that today there are kind of crypto native asset managers, there's crypto native projects, there's crypto native assets themselves, but eventually we will actually see these banks will all use this technology. All of the asset managers will have traditional assets plus these new assets, and it won't be so much of a line in the sand as it's just an asset, it's just an asset management firm?
Short answer, which would make for a very, very boring interview, is yes, for sure. I mean, it's a bit like, I get slightly miffed when people say, hey, David, you run a fintech company. Well, no, I'm in capital markets or finance, and technology is central to everything we do. So when you look at what's happening in these institutions, I mean, some of the biggest banks in the world are now getting assets off balance sheet using blockchain technology and using a private coin between those banks. So they're starting to realize the use cases for blockchain. That's before I get back to an old hobby horse of mine, which is, the blow-ups you've seen in traditional finance over the last 3-4 decades have always been because of problems around settlement, payment, and reconciliation. It's clear to everyone that blockchain can help with that. Blockchain technology can help with all of that. So it's a bit, I think maybe in the early 2000s, certainly the second decade of the millennium, people were saying, if you didn't have a fintech or a mobile strategy, you didn't have a business. Well, guess what? Right now, for any business, if you don't have a blockchain strategy, a blockchain team, you will not succeed. You simply won't be here in 10 or 20 years. And that's why I think the biggest institutions in the world are addressing it now. They're investing more than ever. They've got bigger teams than ever looking at it, because it is just the internet, right? Is this the third wave? I don't know. I happen to think we might be in a very fortunate generation. We waited a couple of 100 years for the second industrial revolution, which was the internet. I think blockchain technology is going to be the third great one. And I think everyone is now aware of that. So whether they are crypto evangelists or not, whether you see the headlines about XYZ, bank CEO calls it this, that, or the other, what a particular asset, this thing or the other. One thing is clear, they're all investing in blockchain, and this will be, the next internet, and they all have to have a strategy for it that pervades through all of their organizations, front office to back office.
So when I think over a really long time period, it's pretty obvious that, hey, look, they're coming, they're going to be here for a long time. They're not going to invest all of their headcount, their time, their energy, their money into doing this. But along that road, it can get quite bumpy. We've seen things like Three Arrows Capital, Luna, Tera, and many others that probably have almost put up warning signs or stop signs for some organizations saying, look, there is risk ahead. Be careful as you go into this industry. How have you seen those kind of specific situations play out with the excitement of the organizations or the institutions? Are they still just as excited and they understand that that's a small part of the industry? Or are you having to have conversations with them saying, look, here's what happened. Let us explain to you what we're doing to mitigate these types of risks in the future. Like, what are you seeing there?
Mostly they've ignored those failed projects, right? Because they weren't involved. And sometimes a slightly haughty approach or arrogant approach that is, that was crazy, whoever thought it would work. Actually, a lot of them weren't dumb ideas, but in everything, if you talk to, most people don't react that way because all of them invested in 95 dot-com stocks and they got lucky with a couple, right? And 90 odd went to the wall and they made money on the couple. Sorry for the United States listeners, a couple is two as opposed to a few. So yeah, they got right with Skype, they got right with Amazon, that's it. And there's a whole bunch of other ones, pets.com, that didn't work. So I think they've largely ignored it. And in fact, as an industry, as a crypto industry, if I'm allowed to be part of that for a second, is perhaps we've over dramatized it. And let's not go into the details of those. There were certainly flaws in there. But I think, to build scale in any business, you need to have two things. You need to have good grasp of the fundamentals and you need to have imagination. Now, within the crypto industry, there's an abundance of imagination. And I think that's fantastic. That will fantastic concept that will pervade throughout capital markets, but perhaps there wasn't enough knowledge of the fundamentals. It was as if we had reinvented borrowing and lending. Well, we haven't. Ultimately, the fundamentals are the same as stock borrowing and lending that have been around for centuries. So I think the lesson to us in the industry, but by the way, the guys in traditional finance have learned it many times over, is get a good grasp of the fundamentals. And I think if you want to talk about those three, then it is probably a failure to address the fundamentals. But the imagination is what's driving the interest for all of us in the industry. And it's the imagination which is starting to take hold within traditional finance.
Yeah, it's fascinating, this whole idea of like recreating or relearning lessons of the past, but that is true for all of human history. And so I think it's clear to call out like that's not abnormal, but it still is important to understand what works in traditional finance, what doesn't work, and why, right? It goes also towards regulation. I continue to say, things like transparency rules or things like disclosure rules, they're there for a reason. At some point, they weren't there. People were doing things. And so there's a group of people who said, hey, we should probably put this in place because of A, B, or C reason. Do you see regulation still being a hurdle for a lot of these organizations, or have they gotten past that and they're now comfortable actually kind of participating without more regulatory clarity?
They're not past it. But I think more than ever, they are trying to influence it. It's just a fact that the biggest organizations, the biggest regulated organizations on Wall Street and in the City of London, across the globe, need that regulatory determinism. They need to understand, they need to know the rules of the game so they can add to the value of the game. Without that regulatory determinism, they simply can't proceed. But what I'd say is, right now, so get ready, everyone, they're readying themselves, right? They are acting as if there was regulation in terms of the preparation, the connectivity, understanding the product, coming up with the structures, right? I can name probably 6 of the largest banks in the world who, if and when they get the green for go sign, I think they can be active throughout all the markets in crypto within a month. Mm-hmm. So that they're readying themselves, but they do need those approvals, be it the CFTC, the SEC, or the Fed, right? They are going to need the rules of the game to be clarified. They are going to need that regulatory determinism. I'm hopeful and I'm expectant that we will get there. But look, we're going to be impatient in crypto land. We're probably going to expect it this year. We're not going to see it this year. I'd like to see there'd be some sign of regulatory determinism in 2023. I think we'll be much, much closer. If I had to bet, then the floodgates to true institutionalization of crypto will be 2024. And the key that opens or unlocks those floodgates will be regulation that is understandable and is built on the key pillars that currently exist within traditional finance.
What's fascinating to me is there's a common phrase in the industry: bear markets are for building. You all, in past bear markets, have built a ton of infrastructure and then obviously reaped the benefits of that as we moved into bull markets. What are you all building now? What do you find to be kind of the biggest areas of focus that you think will actually prove to be great investments on your part over the coming years?
I can't tell you everything, Anthony. I've got to keep something up my sleeve, just up here somewhere. But no, look, we're proceeding as we have done for the last 5 years. I mean, we launched LMAX Digital in 2018, so it's the 5th year of operation. I'd be a pretty average CEO if I rested on my laurels and thought the product in 2025 would be the same as 2018. If it's the same, I will have failed. So for me, 2022's over. I'm most of the way through 2023 now. So in terms of what I know we're building, what we're producing, and everything is about enabling market access for the customers that I know. The customers that I know are institutions. So what have we done? Launched futures, right? Institutional futures in Europe that are 24/7. What's after that? So they're fiat settled futures. What's after that? Move into physical futures, of course. What else have we done? We've started to seed the DeFi environment. So we have helped with the growth of the Pith network, right, which now has 75 apps built on Solana within that. So what else are we doing? We're trying to create clearing solutions for all those institutions so they can access spot and derivatives within crypto. We're building out a much better custodian offering, which, guess what, is the bedrock for that clearing. What I mean, everyone wants to be a custodian. I'm not looking at it as a revenue generator. I'm looking at it as a facilitator to my core exchange business. It's so I can list a lot more coins, a lot more tokens, and because in order to list them, I have to be able to store them. So that's what we're working on right now, plus adding distribution capabilities across the globe. So I've added distribution partners in Asia, in the Americas, and in Europe. And we must continue to do that because that's the key to any successful business is quality distribution. But it's building the product, continuing to build that product out, and then ultimately getting it in the hands of the customers I know, those institutions, as quickly as possible. So yeah, I'd say more of my company, more of LMAX Group is focused on the crypto side of the business, the LMAX digital side of the business, than has ever been the case.
Yeah. It's funny to hear you talk about distribution. There's a saying in the technology world, first-time entrepreneurs focus on the product, second-time entrepreneurs focus on distribution. What's unique about you all is you seem to be doing both. You continue to iterate and innovate on the product side, but distribution is a very big part of what you all do. Talk a little bit as to how you've seen that work well, and maybe some things that you've tried in the past that haven't worked as well, going and bringing a new asset class to these institutions.
I like that. I like that saying. And, it's very hard to focus on everything. And sometimes when people go on about customer, it's kind of business school BS, right? Because ultimately, one of the greatest successes of our lifetime, Starbucks, did not talk to any customer, right? We did not know we wanted to spend $5 on a frothy coffee 20 years ago. They didn't speak to any customers. But, look, we're all about market access. You've got to build great product and get it into their hands. What doesn't work? So I'll try and give you an example of things that didn't work. Is to cut out some intermediation layers. So go to the end customer and speak an institutional language to them. Well, that doesn't work, right? I've tried that a few times. So for example, this is going back a decade. I stepped all the way back from going straight B2C because I didn't speak the language or I didn't distill the message well enough to that segment. So then what I said was, okay, let's be B2B, right? Let's speak the same language as that as that broker or that B2B business, and then they can disseminate it to a wider group. Some of my biggest customers in LMAX Digital today would be retail-facing brokers or payment providers. And quite simply, if the end customer came directly to me, they'd probably be disappointed with my service because I wasn't giving them the bells and whistles they'd expect. So it's not just the sales message or the marketing message or the latest sales guide. It's actually finding the right partners that can explain the message in a language that segment and that customer understands. So, like, I think we would do well in the industry to think about that, all right, and build products or messages that are appropriate for the segment we wish to address. And it's interesting to me recently, people are all talking about, oh, can we have a broker on an exchange? You know, can there be new rules about doing that in the United States of America? One of the largest exchanges in the world just said, okay, we're going to set up a brokerage house. I'd recommend that they didn't, or they outsourced it, because it's a different language. It's just a very different language. It's a bit like when I look at technology, you know, we need to evolve. If I'm talking to crypto evangelists now, and I talk about on-premises technology, they've got to look at me like I'm a dinosaur. But guess what? On-prem technology is what's required for low latency exchanges. That's what we do. That's what we're good at. That's what the biggest exchanges in the world are good at. But that's not going to work in the future of TradFi, DeFi, and crypto brokerages. It's all going to be cloud-based, and people are going to want to access it from all over the world. So look, I put a couple of things in there together: distribution and technology. But you've just got to keep moving ahead. And I think even for old guys like me, we've got to try and keep abreast of the new way that people want to consume information. You know that. I mean, the way people have consumed your information, your broadcasts over the last 3 to 5 years has changed and will continue to change and evolve. Myself and everyone at LMAX Group and in our industry must do the same.
Yeah, I completely agree that it's changing, and it's kind of wild to see it change even month to month, year to year, right? But definitely there's a shift to digital, and those who are able to kind of get ahead of it will benefit greatly. My last question for you is, as you look out over the next 5 years, kind of encapsulating the rest of whatever this bear market ends up being and into the next bull market, what's the one thing that you're looking forward to that you think people may not be really talking about, but you think is really important? Is there something that you can kind of pinpoint and say, man, you know, we should really be more focused on X, or this thing is much more important than people realize?
Yeah, probably the boring stuff. And it is back right down at the heart of traditional finance, right? It's credit, it's clearing, right? I'm spending an awful lot of time thinking about that, designing product for it, and working out solutions with institutions to access the crypto space today. Quite simply, that's the key. It's follow the thread, follow the assets, right? Follow the thread of the assets. There are $200 trillion of assets in custody today, right? Follow that thread. How did it get there? Why is it invested in those asset classes? What intermediaries did they use, right, to store it where they store it? Follow that thread, and suddenly you open up all of those assets to having access to crypto. So that's it. Look, it's a dull answer. I'd love to say, I'm sure somebody will say this blockchain or that blockchain, this repo model or this DeFi product. I promise you, if you want the 3 R's that are so key in every industry, if you want repeatable, resilient, responsible returns, then you've got to address what's right at the core of that. Right? And that's all I try and do at this group, is produce those 3 R's, right? So responsible, repeatable, resilient returns. So if you manage to do that, then you'll be okay as an institution. So look, that's really what excites me, because I think we're on the cusp. We're on the cusp as an industry of solving it. It hasn't been solved for the last 14 years and since the Bitcoin white paper, but we're on the cusp. And if we solve it, then that wall, that divide between TradFi and crypto will have gone. And if you, me, and everyone else in the industry manages to get rid of that partition wall, then there's no limit to what can be achieved in crypto and DeFi.
That's the game, my friend. Where can we find people, or where can I send people to find you on the internet or find out more about LMAX Group?
I always get told off for this, but it's lmax.com and it's mercer.david@lmax.com.
All right, thank you so much. I appreciate it. We'll do it again in the future.
Good to see you, Anthony. Thank you.